Welcome to the October 28th, 2019 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. You have tuned to the right place. I am Spencer McGowan, President, McGowan Group, your financial weatherman, with your fast-paced tour of the global financial markets, insights that you just can't get anywhere else. Let's start with the Dow because I'm going to give you some insights that I'm not seeing anywhere else, but the numbers back it up. First, this is the 5-year Dow chart. You can see the 27,000, the range-bound market we've been in, the 22 from Christmas. We've referenced that before, but I'm going back here to 2015. See that low of 15,000 on the Dow? Seems like a long time ago here in 2019 because we're at 27,000. Notice this range-bound market from 2014, 2015, 2016. Whoop, there's the election. There's a 40% gain. You've been digesting that gain the same way that we digested the 2012-13 gains here in a range-bound market. See, that took about 3 years or so of a range-bound market, which would put us somewhere 2020 late or 2021. What does that mean and why did that happen? Maybe it tells us something about this market and where we're going for 2020. Those of you that want to update your plan for 2020 through 2030 need to go to networthradio.com, fill out the preliminary client questionnaire, come meet the team that cares, because we are the asset manager with the insights that give you a high cash flow portfolio. Let's look at this. There's the 2015 earnings report. Notice that corresponded to the Dow's low point. What is this? This is earnings on the S&P 500, essentially the U.S. blue chips. How much do they make each quarter net after tax? That's what this graph is. Now, that's an earnings recession. Earnings didn't go up. They went down a little bit from really about $30 per S&P unit down to $25. That was a 20% decline in S&P earnings, and we had a correction in the markets in 2015 corresponding to that. What's ahead? Well, let's look at this big gain here that corresponds to the big Dow gain that I just pointed out. Then let's look at this. Profits actually went down from $40 per quarter all the way down to about $36 per quarter, and we leveled off. This quarter's coming in at about a 1% increase. Well, that's about this that you see right here. What's ahead? Well, if the analysts are correct, and many times they've got the direction right, oftentimes not the magnitude, but look at this. Oh my gosh, this is 2020 and 2021. Are we seeing a forecast here? You bet we are. Are we seeing a reason for our range-bound market? You bet. We've been in an earnings recession like the correction of 2015. Now, $40 per S&P unit was the record back here in 2018, which corresponded to the Dow being 27. It's all starting to make sense. Profits matter. How much money are companies making? Well, look at this. Analysts expect it to go over $50 by the third quarter of 2021. That's a 20% increase in earnings. Wow. Are we seeing the pattern? That means that what we've had is, yes, an earnings recession. So if you're worried about the big recession, earnings already had one, and they had one back there. It doesn't always mean it's a 2008 disaster. Sometimes the market just goes sideways like it did for these 3 years. That's the first insight. But if you get dividends and cash flow, second insight, then your portfolio can benefit from a range-bound market and even gain trading advantages. If you don't spend all those interest and dividends, then you can plow that back in for future growth. There's the strategy for 2020, and be sure to get your customized plan in your free 1-hour brainstorming session at the McGowan Group. Interest rates. Look at this. Well, this is a downtrend in interest rates. What's happening here? I call it the equalization of global interest rates, and Europe has a bunch of negative rates. So the risk-free rate is moving to 0%. Anything paying above 5% therefore has gain potential. And that's what this interest rate chart tells us. Federal Reserve lowering the short rates. You can see the white T-bill here going to 1.6 means here at the end of October, next week they're likely to cut rates. We'll see if I'm correct in next week's YouTube broadcast, right? But the prediction that T-bill's making is the Fed goes for the third time cutting rates this year. They went too far too fast, sucked all the capital out of the emerging markets, and rates are becoming more global. You'll have an A team that's near zero for the risk-free rate, the treasuries, and you'll have a B team that's like Greece and all the others in the emerging markets. Texas Instruments had a tough week, went from about 130 to about 118 right here. That's the white chart. And Raytheon, Lockheed Martin. Why do I put these charts here? We have helped families that accumulated big amounts of stock with a harvesting strategy. I've got clients that worked at Nortel and they went broke and they're still retired. Doesn't guarantee the outcome, but I've got a strategy. It's called the tree and the fruit. Harvesting these hopeful high points by selling about 10% of your position, whether you're Texas Instruments team member, Raytheon, or Lockheed Martin. The tree and the fruit plan is what we use for your harvesting strategy. You got a great situation, right? That's a year-to-date chart, but let's look at it longer term. Texas Instruments rose to over $100 a share back there, then all the way down, and what do we see right here? Well, if we take this, it's a harvesting strategy. And what that means for you and I is that we want to be selling along the way up and building another fortune in addition to that stock that we'll call a tree. But notice how long it is sometimes between new highs. That range bound, boy, this is a long period for TI shareholders. That was a long 20 years. And if you harvested along the way up, then you got some, hopefully about 129 if you had a good harvesting strategy. That's the kind of planning we do at McGowan Group, and I look forward to personally meeting you. Be sure to subscribe, because when the markets quake, you're going to get fast-breaking intelligence right here on YouTube McGowan Group. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures: value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.